Hi, hello. So we'll be starting section D today, section D of CMA part 1. Okay, so this is mainly dealing with cost management, different types of costing, different types of cost concepts, and using this knowledge we will be able to do our budgeting, which is covered in section B. Okay, so before we do section B, it is always better to do section D so that you will understand the concepts of all types of costing that we can follow, and using that knowledge you can prepare a budget. So we will go and study the concepts of costing from basic to advanced. The first slide is discussing different classification of cost. So there is a cost that is called as direct cost. So what is direct cost? Any cost that is directly traceable to a specific cost object. That is what we call it as direct cost. Or we can say cost directly related to the product. Suppose if you are a laptop assembly unit, for example, you are getting different parts of laptops from different parts of the world and you are assembling the laptop here in Kuwait, for example. So you know that to make one laptop, I need a keyboard, I need an LED monitor, I need a hard disk, I need a RAM, all those things. So all the item that is directly, I can say, to make one laptop, I need one keyboard. To make two laptops, I need two keyboards. So it is directly traceable to the product. But we can say we have an assembly unit which is situated in Kuwait. For that we are paying rent. So when we pay rent, can we say this rent is for this particular laptop? No, we cannot, right? That rent is not paid for a particular laptop. That is for the complete business you paid the rent. So how you will allocate that to the laptop? We cannot directly do that, right? So such type of cost we call it as indirect cost. This cost that cannot be identified with a specific cost object. For example, maintenance, security. You have a security guard in front of the laptop assembly unit. So he have a salary. So his salary we cannot directly trace to the product. Like how we trace the spare parts of the laptop to a laptop, we cannot trace that. So this is what we call it as direct cost and indirect cost. Direct cost, we can say it can directly traceable to the product, but indirect cost, it is not directly traceable to the product. And cost can be classified based on how the cost is behaving. So we have, based on this behavior, we have variable cost and fixed cost and mixed cost. So what is a variable cost? Variable cost is the cost that is going to change based on the activity level. You make new products, more and more products, you will have more and more cost. For example, again, laptop assembly unit, you have keyboard cost. You have to buy the material, right, which is keyboard. So when you produce one unit, maybe you have to pay $20 for the keyboard. When you produce 100 unit, you have to pay 100 into 20, right, $2,000. So as the units of production is increasing, this cost will increase. If you don't produce, this cost will decrease. If you don't produce at all, you don't have to buy any keyboard. So based on how many units you are producing, the cost which is going to change, that we call it as the name indicating, variable cost. This cost is going to vary. An example is direct material. More you produce, you need more material. Piece rate, labor. More you produce, you need more hours of the labors. Sales commission. More the salesperson sell, you have to pay more. Sorry, you have to pay more commission. If they sell less, you will pay less commission only. So this cost which is changing according to the activity level is called as variable cost. Then what is fixed cost? We can say rent, for example. So same in our example, laptop assembly unit have a rent, and this year or this month you didn't assemble any laptop, but still you have to pay rent, right? So that's what fixed cost is. Regardless of the activity level, you have some expenses that we call it as fixed cost. So you produce 1 unit or you produce 100 unit, your rent is fixed. You have to pay that amount. So that cost we call it as fixed cost. Example is rent or property taxes or depreciation. All these are cost which is fixed within a relevant range. It is not always fixed. So we can say I have an assembly unit of laptops in which I can work and I can store maybe 100,000 laptops, but not 1 million laptops. Okay, so when our production capacity or production level is increasing to 200,000, then we need an extra place. So that time your fixed cost is going to change because my rent is going to increase because I need another place. So up to a certain level or range, this cost is not going to change. That is what we call it as fixed cost. Then what we have is mixed cost. What is mixed cost? It's a combination of fixed and variable elements in that. You have both elements in that, fixed and variable cost. Okay, we will explain that in the coming slides. So variable cost we can discuss further here, the characteristics of variable cost. So we can see here, when I produce 1 unit, my cost per unit is $2 and total cost is $2 only. When I produce 10 unit, cost per unit is same again $2, but my total cost is now $20. When I produce 400 units, again cost per unit is $2 only. I'm buying it at the same price, but my total is 800. So as we see, as the number of units increasing, my cost is increasing. Total cost is increasing, but my cost per unit is same, right? So this is the characteristic of variable cost. Per unit cost will remain same, but the total cost will change based on the number of units we are producing. So per unit cost is going to be same, and the total cost is going to increase or decrease based on how many units we produce. Here we will see the characteristic of fixed cost. You can see here, I have a rent or I have a fixed cost, for example 50,000. So if you produce 5,000 unit or if you produce 25,000 unit, my rent is same. It is not going to change. So it is a fixed cost. Or we can say my total cost is same up to a relevant range. It is not going to change. But you can see here, when I produce 5,000 unit and I spend $50,000, that means every unit is getting $10 of this fixed cost, right? This 50,000 I am dividing by this 5,000. So when I produce 10,000 units, then 50,000 divided by 10,000, it is $5 per unit. So here when I produce 25,000 units and paid $50,000, that means per unit I am spending only $2. So what it is trying to explain here is, the total cost of fixed cost is going to remain same, and the unit cost, it is going to change based on the production level, as opposed to variable cost. Variable cost is opposite. Cost per unit remains same, but the total cost is increasing or decreasing. But here total cost remains same, but the unit cost is changing. So this is what actually the concept of fixed cost. Anyhow, our total cost means if I make a product, I need to cover both the costs, right? It is not enough to cover only one cost. I have to cover my fixed cost and I have to cover my variable cost. Then only I will get the total cost of the product, and I can add my margin and I can sell the product if I know the full cost of the product. This is what the major the concept we are going to cover in all cost topics. we have to find what is the total cost of the goods what we produced, so that we can accurately price the product and we can sell it. So here, what is total cost? Total cost is going to be equal to fixed cost plus variable cost. You have to add both the cost, then only you will get the total cost. For example, if there is no activity, that means you will not have any variable cost. You are not making any laptop, so there is no need to buy any material. You don't have to keep any labor. So when the activity level is 0, what will be your total cost? But still you have to pay your rent, right? As long as you are occupying the place, you have to pay the rent regardless of your production level. So when the activity level is 0, that means you don't produce anything, so your total cost is going to be your total fixed cost. Here you will not have any variable cost. Okay, so that is what explained in this graph. You can see here, this is the dollar amount of cost and this is the number of units produced. And you can see here, there are some costs that will not change if you produce 5 units, if you produce 25 units. Why? This cost is a fixed cost, the rent you are paying. If you produce 0 unit or if you produce 30 unit, your cost is same. So this line is denoted by total fixed cost. That is not going to change. Then what is changing? What is changing is this variable cost. And you can see, when I produce 0 unit, my cost is 0. When I produce more, my cost is increasing. You can see cost is increasing and increasing, but fixed cost remain same. So based on the increase in total variable cost, your total cost also will increase. So your total cost is what? This plus this, right? Your variable cost plus your fixed cost. Or we can say the difference between total cost and total variable cost is what? That is your fixed cost, right? So this distance and this distance has to be same. I don't know if it is accurate, but it has to be same. Why? Because this is the fixed cost and this is the extra amount you are adding to variable cost to get the total cost is fixed cost, right? So it has to be equal. The distance here and here has to be equal. So this is the explanation of fixed and variable cost. Now we have mixed cost. So that means this cost have components of both, which is variable and fixed. So we can take an example here. You bought a router from any internet provider, and the agreement between you and the provider is that you can use 500 megabyte of data and you will pay $500. Just hypothetical number and amount, don't go into the reality of that, maybe it is wrong. Okay, so megabyte is 500. Till 500 megabyte you will pay $500. Okay, after that whatever you are using, you have to pay based on your usage. So above 500 MB you use 600 MB, that means you have to pay this fixed cost, that is 500, plus extra 100 MB used, for that you have to pay $100. When you use 700 MB, 500 you have to pay, but extra 200 you have to pay. So this cost is changing as the usage is increasing. This cost is remain same. If you don't use anything at all, still you have to pay this $500. So this is what we call it as mixed cost. The cost have components of both variable and fixed. And in this you will have semi-variable cost and semi-fixed cost. Semi-variable cost is what we have seen, cost for which the fixed cost element shall be a part of the cost that needs to be paid irrespective of the level of activity. Whatever the level of activity is there, you have to pay this much amount. That is a fixed cost. And above that level of activity, whatever you do, you have to pay extra amount. So we have seen that in our previous example. Here you can see We paid fixed cost, and above 500 MB you are paying some cost, that is variable cost. So you have both component. That is what we call the semi-variable cost. Then we have semi-fixed cost. This is the cost which is fixed over a given small range of activity. For some time it will remain same. Given a small range of activity, it will remain same. After that it is going to jump. So you can see here we have an example. We need one nursing staff for 25 patients of a hospital. Okay, you can imagine in a ward you have 25 beds. Okay, so all these 25 patients can be treated or taken care by a nursing staff. So you are paying her, say, $1,000 salary. But when it is 26, he's going to be in the another ward, and this current nurse cannot manage both the wards, so you need another nurse in the other ward. So when it is 26 patients, your cost of nursing staff suddenly increase. Then till 50 patients the other nurse can handle, right? So till 50 patients that cost is not going to change. So it will remain same in that range, which is 25 patients to 50. Then again, if it is above 50 patients, then you need another ward and another nurse. So cost will again jump. So that is what here we explained, or this we call it as step cost. So this you can imagine, first 25 patients, your cost is only this much. First 25 patients. Then next 50 patient cost is suddenly increasing, and it will remain same until a range. Again suddenly it jump, then remain same till a range. This we call it as step cost. So this is step cost and this is semi-variable cost. Here we have variable cost and fixed cost, and this is going to be your total cost. So now we have to find out fixed cost or variable cost from the total cost. That is our concern now. Let me explain. I have produced 1000 units. Okay, I have produced 1000 units, and here the cost of 1000 unit, I mean the total cost of 1000 unit is $5,000. When I produce 1000 units, I spend $5,000. And when I produce 2500 units, my cost is $8,000. 8,000 is my cost. So when I produce 1000 units, my cost is 5,000. When I produce 2500 units, my total cost is 8,000. So we are considering here total cost. So how we will find out what is variable cost in this and what is fixed cost in this? That is what we are discussing here, estimating the fixed cost. Estimating fixed cost. So how we will find out? Now we know that when I produce 1000 units, my cost is 5,000. When I produce 2500 units, my cost is 8,000. Now, why my cost increased when I produce 2500 units? Because of variable cost, right? We said up to a certain level of or certain range, our fixed cost is not going to change. So why the cost increased here? It is because of variable cost. Correct? So the increase in cost we can consider from 5,000 to 8,000. Whatever increased is 3,000. Okay. Sorry, there is a calculation mistake in this. 2,500 into 2. Yeah. So increase in a cost is, there is no mistake. Increase in cost is $3,000, and this $3,000 increased to when I produced extra 1,500 units, right? This cost is increased when I produced extra 1,500 units, or we can say this $3,000 incurred because of this 1,500. So we know that when I produce 1,500 units extra, I spend $3,000, which is variable cost, right? So per unit variable cost is 2. Correct? $3,000 divided by 1,500, you will get per unit variable cost, which is $2. So now I got the idea that my variable cost is $2. So you can find out the fixed cost, right? Why? Because we learned that total cost is equal to variable cost plus fixed cost. And if we know the variable cost, we can find out the fixed cost if we know the total cost, correct? So my total cost here is 8,000. In this case, my total cost is 8,000 and I produce 2,500 units. So 2,500 multiplied with 2 is my variable cost, $5,000. 2,500 into 2, which is my variable cost. So what is left in 8,000? 3,000. So 3,000 we can consider as our fixed cost. The same thing you can apply for the first unit of products also. When I produced 1,000 units, 1,000 into 2, 2,000 is my variable cost and the total cost is 5,000. So 5,000 minus 2,000, which is 3,000, is my fixed cost. In both cases, we are getting 3,000 as the fixed cost. So this is how we will find out the variable cost and fixed cost components in total cost. So this we will use the method called high-low method now, and we have another method, regression analysis, that we will not cover now because that we have a separate chapter in section B where we will be using regression analysis. That time we will discuss this. So now we are just following high-low method, which I explained now, but we will discuss that in a better way with this example. High-low method. So high-low method is one of the several techniques used to split mixed cost into fixed and variable cost. So high-low method you will be using to find out what is your fixed cost and mixed cost in your total cost. So what we have to do is, first we have to find out variable cost per unit. How you will find this out? We will see what is the difference in cost when the production is increased and how many units increased. So variable cost per unit is going to be difference in cost divided by difference in units. So you will get variable cost per unit. So that we have seen in the previous example, you got variable cost per unit. Now multiply variable cost per unit with the unit volume, you will get the total variable cost. So if you have the total variable cost and the total cost, if you minus total variable cost from the total cost, you will get your fixed cost. That's what here, subtract variable cost from the total cost. So you will get your fixed cost. We can see this example, high-low method. We have here different production, Jan, Feb, March, April, May, June. And these are the units produced and these are the total cost. So why we call it as high-low method? We will take the highest quantity, which is 6,800, and lowest quantity, which is 3,000. Lowest quantity is 3,000, right? So we will find out from 3,000 units, when the production grown to 6,800, okay, so what's the difference? We have 3,800 units increase. From 6,000, from low is 3,000 and high is 6,800. So the difference in quantity is 3,800. So when there is a difference in quantity by 3,800, how much cost increased? Cost increased is $700. Now why this cost increased? Because this is the cost, we call it as variable cost, that will change as the number of units of production increased. So when 700 units increased, we spent $3,800. So 700 divided by 3,800, we will get per unit variable cost is 0.184. Correct? So this is the per unit variable cost. Now what we will do, we'll take this 6,800, multiply that with 1.8, so we will get the total cost. I mean total variable cost we will get. 6,800 when I produce, multiply that with 1.84, so I will get total variable cost. Then I will take the total cost of 6,800 unit, that is here. From that minus the variable cost, then you will get the fixed cost. So my fixed cost here is 347.365. So this is how we will calculate fixed cost out of total cost. So this you can apply to any of the quantity here. The same formula you can apply to any of the quantity here, and you should get this as the fixed cost. That you have to try by yourself and see if it is right or not. So I think we will stop the class here. This is a good point to stop. So we just discussed about the general concepts of costing. We just talked about what is direct cost and what is indirect cost, and what is fixed cost and what is variable cost, and how you can find out fixed or variable cost if you know the total cost and if you know the total volume of increase or decrease in the production. So that is what we have seen. Thanks a lot for watching, and